As GDP growth remains sluggish, interest rates need to stay low, which is why the Fed is likely to cut rates. The issue is that as GDP growth declines, debt continues to accumulate. In a debt-driven economy, there's simply not enough growth to outpace the mounting debt, leading to constant refinancing. However, things began to shift, particularly during COVID. One key change is the rise of automation. Amazon, for example, now employs more robots than humans. This reflects a broader trend: robots are becoming more cost-effective than human labor. Unlike humans, robots don't complain, unionize, or require benefits, and over time, they are far cheaper and more productive. This trend is accelerating with companies like Tesla developing humanoid robots like Optimus, alongside others like Boston Dynamics. We're witnessing robots with dexterity capable of handling multiple tasks, as similar to how AI has evolved from single-task algorithms to more complex multitasking systems. These advancements will help address labor shortages and productivity gaps caused by declining population growth.
As GDP growth remains low, interest rates need to follow suit, which is why the Federal Reserve is likely to lower rates. The bigger issue, however, is that as GDP growth stagnates, debt continues to accumulate. In a debt-driven economy, there simply isn't enough growth to service or reduce the debt burden, which means constant refinancing is necessary to keep the system functioning. This creates a cycle where low growth and high debt feed into each other, limiting economic flexibility. Yet, at the margins, changes have begun to accelerate, especially following the COVID pandemic. One of the most significant shifts has been the rapid rise of automation and robotics. Amazon, for example, now employs more robots than human workers, a sign of how robots are replacing human labor at a growing pace. The reasons are clear: robots are not only more productive, but over time they become far cheaper than human employees. They don a T need breaks, they don a T form unions, and they don a T demand raises. In essence, robots are more cost-effective and efficient, making them ideal replacements in a world where productivity growth is essential to counterbalance stagnant GDP growth. This trend is not limited to Amazon. Companies like Tesla are leading the charge with humanoid robots like Optimus. We're also seeing companies like Figure and Boston Dynamics pushing the boundaries of robotics, developing machines that can perform tasks once reserved for human workers. Unlike the early days of automation, where robots were limited to repetitive tasks, these new humanoid robots have dexterity and multitasking capabilities, allowing them to adapt to a broader range of roles, similar to how AI has evolved from narrow, single-task applications to complex, multitasking systems. These technological advancements are not just a response to the need for greater productivity, they are also addressing a looming demographic challenge. As birth rates decline and populations age, the workforce shrinks, leading to labor shortages. Humanoid robots can step in to fill these gaps, ensuring that economies can continue to function efficiently even with fewer human workers available. This shift will play a crucial role in shaping the future of economies, as automation and robotics help balance the challenges of low GDP growth, rising debt, and declining populations.
Subscribe our channel and press the bell button to get our video notification. And like the video.
AI agents are starting to emerge, and they are transforming how we complete complex tasks. Imagine hiring freelancers on Fiverr to build your website or create a marketing strategy. An AI agent will soon be able to do all of that autonomously. These AI agents will handle tasks on your behalf, completing them and delivering results with minimal human intervention. As AI becomes more advanced, it will be capable of taking on increasingly complex tasks like building businesses or managing intricate workflows all in an instant. Whereas AI agents execute these tasks, they will also need to handle payments. This is where cryptocurrency comes into play. AI agents don a T of bank accounts, and they want a T be transferring money through traditional systems like SWIFT. Instead, crypto payments will likely become the standard, allowing AI to pay for resources such as electricity and compute power, or for one AI agent to pay another. Cryptocurrency is well suited for this purpose due to its decentralized nature, making it ideal for a future where AI handles both transactions and tasks in a seamless, automated manner.
AI agents are rapidly entering the world and are set to revolutionize how we handle complex tasks. Imagine hiring freelancers on Fiverr to build your website or create a marketing strategy. AI agents will soon be able to do all of that autonomously. These AI agents will take on tasks that typically require human effort, delivering results efficiently and with little to no human intervention. The rise of agentic AI means that complicated processes like launching a business or executing multi-step projects will be done almost instantly without the delays or limitations of human labor. As AI agents take on more sophisticated roles, the need for them to handle payments becomes crucial. Since AI doesn't have a bank account, and when use traditional financial systems like SWIFT, cryptocurrency is likely to become the preferred method of payment in this new AI-driven economy. For example, if an AI agent needs to access computing power or electricity, it can use crypto to pay for these resources. Similarly, one AI agent could compensate another AI agent for completing tasks or sharing data. Cryptocurrency's decentralized and borderless nature makes it ideal for this, as it allows for seamless transactions between machines without the need for a traditional financial infrastructure. This shift towards AI and cryptocurrency integration opens up a new economic model where machines operate autonomously, handling both work and payments. As AI continues to evolve, these agents will become a critical part of everyday life, from managing businesses to completing personal tasks, all while using digital currencies to power their interactions. In this future, AI and crypto will work hand in hand, driving efficiency and transforming the way we interact with the digital economy.
When AI agents are unleashed onto the world, especially in financial markets, the landscape will change dramatically. While there will be checks on AG, the implications are profound. An NFT artist once asked me, half jokingly, doesn't the person with AGI win the markets? And it's a valid point. Whoever controls AGI could outcompete everyone in financial markets across any time horizon. With that advantage, someone could accumulate trillions of dollars in wealth very quickly. A great book called Life 3.0 explores this scenario, discussing how AI running businesses and markets fundamentally shifts the playing field. It means that humans will lose their traditional opportunities for economic advantage unless they own or control the AI. This is why there is an urgent call for universal basic income. Some even advocate for universal basic equity, where people participate in digital communities and get paid for their involvement as a way of maintaining purpose and income in a world dominated by AI. My concern is that within the next 6 years, economies will grow rapidly, but not necessarily for humans. Markets could become increasingly irrational as AI drives decision-making.
When AI agents are fully unleashed into the world, especially in financial markets, it will fundamentally alter the landscape. While there will be safeguards on AGI, the implications remain profound. An NFT artist once asked me, half jokingly but astutely, doesn't whoever controls AGI just win the markets? And it's a critical point. Those with access to AGI could outcompete everyone else across any time horizon, accumulating wealth at an unprecedented rate. Before long, they could amass trillions of dollars, reshaping the entire economic structure. If AI can make decisions and operate autonomously, human opportunities for economic advantage start to vanish unless you own or control the AI. This is why the call for universal basic income is growing louder. Some are even pushing for universal basic equity, where people participate in digital communities and get compensated for their involvement as a way of maintaining purpose and income in an AI-driven world. My concern is that over the next 6 years, the economic system will evolve rapidly, but not in a way that benefits most people. Economies will grow, but primarily through the actions of AI, leaving humans behind. Markets may become increasingly irrational as AI agents make decisions, and by 2030, the very nature of financial markets may be unrecognizable. Even companies that produce physical goods could be appended AI will be able to design, 3D print, and manufacture products with robotics, challenging traditional business models. The software revolution, which has driven so much innovation, could become obsolete as AI makes software and services infinitely copyable in seconds. The challenge will be determining what holds value in this new world, where AI can disrupt everything at lightning speed.
Subscribe our channel and press the bell button to get our video notification. And like the video.